most of Canada's peak home buyers are underwater on their mortgage, and that is not a joke. We're going to dive into this data on this video today, and I'm going to show you, and it's just going to blow your mind what is going on out there. And we are in such a precarious place right now, it goes without saying. So let's get right into this. Most of Canada's peak home buyers with a minimum down payment are underwater. So this is coming from Better Dwelling. The Canadian real estate bubble is bursting rapidly as rates rise, and peak buyers are in for a rough time. Canadian Real Estate Association data shows that the national market peaked in March 2022. And this was right before they started hiking interest rates. Obviously, the hiking interest rates has took a pin to it, but it would have been anything that essentially eroded people's purchasing power. It could have been inflation. If inflation had continued going the way it was going, and I'm not saying it would have, then that would have had the same effect. It just would have been a more painful and longer and more drawn out process than we have right now. So it's kind of insane the levels that they've got to as well. I mean, never did I think that they would get to these sort of levels. Underwater homeowners need to pay to sell their home. They still owe the remainder of the loan regardless of what the home securing the loan is worth. Borrowers need to top up whatever is missing to cover the shortfall. That doesn't include the additional selling costs like realtor commissions, legal, and moving, etc. So yeah, and those real estate commissions, they're high. You pay a lot of money. I mean, to people in Europe, the real estate commissions in the United States and Canada would make people laugh because they are just so high for the amount of effort and work that is really involved for most people working in real estate. That being said, some realtors are fantastic and they completely go to town and try and sell your house. But let's be honest, these days, most people are finding the home just by going to a website and looking it up, like realtor.com or realtor.ca in Canada. So, I mean, how much marketing do you really have to do? And is it really justified, these high costs for selling? I think they're going to go down after this thing popped by a lot, shockingly, for those people who work in that industry. The price of the composite benchmark home has taken a sharp drop since peaking this past March. A typical home fell to $735,000 in October, down 15.3%, or minus $133,000 from peak. A buyer that left the minimum down payment would be 10% pretty much, $71,000 underwater had they bought at the peak. They would have to pay more than that as they put as a down payment to exit that contract. So it's just absolutely insane. People's money is just being evaporated essentially. Like I put on the title for this video, it is literally happening, and it is insane the drop in the prices that we have seen. And this is purely just on interest rate hikes. Just imagine what's going to happen when the unemployment rate starts going up, when we start really hitting on tough times next year, when all the results of these rate hikes that have took place during this year actually come home to roost next year. It's going to be absolutely insane. And think about it, 15.3%. I think we could all agree inflation is running around 20%. You can forget what the government tells you inflation is running at because it doesn't matter. It's what I and you pay in the real economy that really matters. So let's say your purchasing power has dropped by 20% and the price of real estate is down 15.3%. That's huge. That's 35.3% in real terms that prices have come down, and they're still just massively unaffordable. So that shows you just how large this bubble really is, and how you can really get to these numbers of like 50, 60, 70% a lot quicker than people would have thought. And people would have never thought that you would have even been able to get to those numbers, because remember, real estate only goes up in price. And we've been told so many different arguments: immigration, booming economy, which is really due to the bubble, the real estate bubble, and everything else. The reason why prices will just go up never-endingly. Same with supply. Oh, there's limited supply, there's limited supply. Don't think about demand though, just think about supply. Let's focus on supply. Oh, it's like a broken record when people say about supply. So a typical Kitchener-Waterloo buyer was $146,500 underwater in October. By far, it was the worst, with Cambridge minus $140,000 and London St Thomas minus $137,000. Following not far behind, six-figure exits from a home in a small city at least an hour from Toronto sounds painful, to put it lightly. And those numbers are insane, and people haven't got that amount of liquidity. Think about it. Just people have not got that amount of liquidity to exit these deals. So it begs the question, what happens if one of them loses their income or loses their job and they need to sell that home? They're screwed. They go into foreclosure, they lose the home. And this is exactly how the 2008 financial crisis played out, when people started losing their jobs, when the economy started going downhill in 2007. That really started to have an effect, and then it started to have an effect on the banking system, because all this kind of lags and takes time. But because it's been so extreme this time with the rate hikes, it could happen a lot faster. There's definitely an argument for that, I would say. So it then shows you a chart basically showing you March 2022 and October 2022 in dark blue there. And you can see that a lot of these places have declined significantly since just March of this year. So you can clearly see like Oakville, Milton, for instance, that was 1.6 million in March, and right now it's 1.242 million. Just insane, some of these things. And even when you head down to like some of the more affordable markets, you know, they've barely gained. Like Calgary, for instance, October 2022, $513,000, and March 2022, $523,000. So it's gone down slightly even there. And just think about it, because those prices have pretty much been flat for so long now, and the people buying in that period, if prices just drop by 10, 15%, you're putting like so many people underwater on their house. And then that means that if job losses happen, which the yield curve is telling us is gonna happen, what's that gonna do to prices, even in affordable markets? So people think these more affordable markets can't come down. They're in bubbles too. They're just not in the gigantic bubbles that you see elsewhere in the country. And I think that bears some recognition, because a lot of people think they're taking less risk when they move to a market that is priced lower, which just is an absurd sort of way to think about things, in my opinion. And then it basically has this other chart that basically says the remaining equity of a typical home in March 2022 that would have in October 2022. So it basically shows you how much equity they have left. So Vancouver has the most at 138,000. And then it goes all the way down to the other end, where you've got Kitchener-Waterloo, 146,000 under. It's just absolutely insane when you think about that. London, all these places that were absolutely just going crazy during 2021. Like, they were in just an absolute mania. The work from home, oh my God, it's never going to end. All these different narratives that were put in place, and prices are never going to come down. This is the next boom town. You're at the next boom town. London, 3.5 hours away from Toronto. Oh my gosh, people are in so much trouble. They've just been led down the garden path. And it happens every time, unfortunately. So negative equity sounds scary, but the only significant concern is to investors. I don't agree with this at all. Large mortgage lenders aren't known for kicking out borrowers that make regular payments. Agree with that. They want your interest payment, not the home that's worth less than the loan. If you're planning on living in that home for 10 years plus, it's not a significant concern that you'll default. And that is an absolute load of garbage, really, because I know from the NBER report that came out in 2015 that analyzed what happened in 2008 in the US, that the probability of you defaulting if you're underwater on your house skyrockets. And why does that happen? Well, it's obvious. For a start off, people might just walk away from that obligation. They might walk away, move back home to their other country. That's a significant risk in Canada because you got a lot of immigrants, especially ones that lied and committed fraud. They might just think, oh man, let's just cash out, or well, not cash out, but let's just leave and go back home, and then we can come back in 5 years and it will be just off our record or whatever it is. And then you've also got the element of, well, what happens if people lose their jobs? We're heading into a recession. I mean, just because you're going to be living in that home for 10 years, you may not be. If you bought that house and it's now worth less and then you need to sell, and most people overextended in 2021, and that's what people failed to recognize, even though that's exactly what was happening last year in 2021. So it's going to have a massive impact when you really think of it. You gotta really think of it from a 30,000 foot view instead of just focusing on certain areas of it. And that's what I try and do. And I try and look at areas where, you know, I could be completely wrong and everything like that. What's the argument for prices continually going up? And I haven't heard a good one yet, and I'm yet to hear a good one. They're the same ones that have been parroted by the mainstream media, and we know if the mainstream media and the herd mentality is parroting something, it's more than likely the complete opposite of that. So it's kind of insane, really. So the banks are fine as well, since the loan are generally insured with a minimum down payment. How are they fine? Because that minimum down payment has vanished. It's a pain in the butt. However, the borrower paid a nice insurance premium, so the bank would be protected. The borrower is still on the hook for the full amount, though. The thing is, when the crisis really happens, a lot of these insured loans, I can guarantee the government is going to be pushing back on them and saying, hey, you know, you got to pay out losses for this. And there'll be quite a fight between the banks and the government on who's going to pay out over these defaults, because essentially there's been so much fraud and other things that have took place in the market, so much risk that has been took on, a reckless amount of risk by the banks, that it's sort of obvious to me that some of that is going to be pushed back onto them. So even though there's all these insurance premiums, what does that insurance cover? Does it cover if the bank didn't do their due diligence in vetting people for the loans? There you go. So you really got to dig into the nuance on what they say here. And then this, just to end on an insane fact here, investors represented between a quarter to a third of the market, meaning there's significant loss potential. I mean, here we go again, guys. So they're a third of the market, let's say. So, you know, all this talk about immigration being the cause for housing prices going up and money laundering, they're definitely there. They definitely do put some pressure on, but it's some. The main pressure is the speculative frenzy. It's the investors. That is what the main pressure is. I saw that for myself when I lived in Milton, which was like a boom town during 2016, 2017, 2018. It was absolutely insane to see the level of speculation, and like more than 30% of the houses, all these subdivisions, were being sold to investors, mostly Canadian investors, not foreign investors like the media wants you to think. So it's kind of, that number is just insane to say the least. I don't understand how anybody can start squawking about immigration when you see that amount of investors participating. So anyway, if you enjoyed this video, you might like that one there, and you might also like this one here. And please sign up to my free email newsletter that is in the description and the pinned comment so I can stay in touch with you